Hello everybody, welcome to another charting session here on the channel. Today is March 17th, and I'm going to be going over the past week's action and also Friday's action. So, first thing to look at is on Friday, I took 0 trades. There was one trade I was wanting to take, but I never got the opportunity. So here's how it went. This was a very, very simple setup. And I'm going to explain why action was sort of so good. So if we look at this in ES, you can see that on Thursday nights and Friday nights or Friday morning's action, right before market open on Friday, we had this SMT created. And in this SMT, we had well, first we had this up here and we had a massive push down, right? We then consolidated and we went back up to redistribute to this fair value gap. And then right here, this fair value gap. We also created this SMT. So ES made a new high while NQ is making a lower high. And then we had a rejection off. Okay, so at this rejection off, this would be the last leg. So you'd put standard deviation on this little body. Oh, wait, sorry, hold on. This is on a smaller time frame. Sort of like right here, right? And we had this massive push down. Now, the market opened around 9 o'clock. And the market pushed down right after this SMT was created and sold off to these lows that we were wanting to take out for a very, very long time. And if you actually look at the 15-minute here, there was an entry. So this entry would have been at 8:30. And I do wish I was at the market at this time. And this is sort of my wake-up call. I'm going to start trading before market opens, just in case of anything like this. Because sometimes you're only going to get your first entry of the model once or during the pre-market, right? And there was no other entries. After this happened, if we go to like the 5-minute here, this is where I was looking at the market. We had really no retraces. The only nice thing that was here was, and I didn't see this at the time, but it's a propulsion block. So we have this order block, and then we have another order block going into it. So the way this would look would be, you could mark order block, and then you see rejection back down, and then we go back up into this and create the second order block. Once the second order block's body gets closed below, so right here, you would mark out this as a propulsion block. And then two things could either happen with this. Where would this? There we go. Two things could either happen with this. One, we would respect 50% of this propulsion block. So we would see that price would come back up and respect this after we then close below this again, or even when it just taps here, or whatever is your style of trading, you can put in your entry. But as you can see, we just came right back down. Now, some people will just put their entry in after we close below this, but I personally like to see the second confirmation, right? So that's something that you could have taken a trade off of on Friday. But yeah, after that, we sold back off down to these lows in the range, and just massive sell-off, and then we consolidated the rest of the day. So obviously no point in trading, but the standard deviation did meet the 2 and 2.5 level. As you can see, it respected it pretty well, right? And we got a little push up. So next, looking at where price may go, we'll see that we may rebalance up to this 1 hour fair value gap and this breaker block, and maybe tap, either golden ratio or this OTE to sell back off lower. And if you do look at the daily, we do have, this is ICT's Charter Model 1. It's where you have this sort of formation where you have, you have an up close candle and then down close candles. And as you can see, what the goal is for us to take out a low. Okay, so after we go down and we take out the first low, this is going to give us a bearish bias. So this candle right here on the daily will give us a bearish bias. And as you can see, the bearish bias worked out well, and we took out all these recent lows. Now, if we count the candles, we would go back 20 days. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So this would be the low. So this is the low that's going to want to get targeted in this model. So I do think if this model does play out well, that we will get down to this low. We may have a little retrace back up to this 1 hour and then sell back off again. That's what I'm hoping. That would also be great for the move to take out of this sort of uptrend consolidation. We could just sell off and take out these lows. So we got some sort of stacked liquidity. But yeah, this was the one move on Friday that took out all of this resting liquidity that's been wanting to get taken out for the past like 15 days or something, right? 10 days, I don't know. But let me just clear the charts here. And I do sort of want to talk about the fractability in price. So if we go to the 4 hour, right, this is where you're going to usually find your biases, look for your range and all that. So I'm going to go ahead and mark these lows out real quick with dashes. All right. So if you look at this 4 hour for quite a while, right, ever since we got 1 week, 2 weeks, 3 weeks, about a little over 3 weeks, we have been inside of this range. And yeah, this was all just consolidation. Okay. So looking at this, our main goal is to seek liquidity on this range, on this consolidation range. So that's either to go up to this high, go up to this low. Anything inside of this range is going to be lower probability. But I'm going to explain sort of how price wanted to get out of this range. So if you look right here, we had a couple things happen. I'm also going to mark out this low as well. So first of all, we came up, put this new high in, and we sold right back off. Same thing here happened. We put a new high and sold right back off. And we did not take out this liquidity. Same thing here. We did not take out this liquidity. We had this liquidity form, and then we took it out, and we quickly acted that as a sweep to go back higher. Then what happened here was we came back up into this range, and we tapped OTE. We respected it very clearly. As you can see, no bodies actually closed above here. And we sort of had this little breaker. I mean, it's on like a 1 hour. It's probably a breaker. Yeah. So this sort of breaker was also respected to the tick, basically, as you can see right here. Here would be your breaker. So we respected that. We respected OTE and this 1 hour fair value gap. And I do believe do we have an SMT here? Hold on, let me check real quick. No, we did not. No. But we did have, we know we didn't have one there, but we did have one right here. So going into this, we saw this 1 hour got respected, and we had this SMT create, okay? So this would signify after we get this massive push down, respecting all this, we come back up to rebalance, also creating this SMT, and I bet this also went to discount of the range. Yes, it went past discount, so it went up to premium for the sell model, and then we take OTE, and you can see we also did respect golden ratio of this as well, right? If I actually put these to the bodies, if I put these to the bodies, we didn't, but we did go into discount. So we had another sell-off, and then this was our last final push with this SMT to finally seek that liquidity that we've been wanting to seek in this range. So now that liquidity has been taken, I don't know, we're gonna have to see. Let's real quick see if we have any news on Monday. I really hope we do. So yes, wait. honestly, we probably don't really have much. I don't think this is really going to affect anything because it's at 11:30. So yeah, I mean, we have this and it's all day, so maybe Monday's action to be good. I'm not 100% sure with that. So talking about fractability, all right, this is an external model. It's on the 4-hour chart, right? So what's going to happen is we're going to respect a bigger time frame thing, a higher time frame thing, like also this 1 hour. It's external because you're not really going to place trades off the 1 hour alone. So you want to find PD arrays that are being respected in the 1 hour. So let's say we go right here. Then you're going to want to find a model inside of this to take. So for an example, you could see this rejection off. We created this high, came down, swept these lows, came back up, rebalanced, and this would have gone and tapped OTE. As you can see perfectly, it would have tapped OTE. And so you can have these two things. You can have this OTE projection right here to take your profits. I don't use this though. I mean, you could use like this is a good level. Come down, we respect this, come back up for a second entry, and this for value gap. And then we come back down to take our last profit here, leave a runner, maybe down to this low, right? And so this could be an entry inside of this bigger model thing, right? You could even go probably even lower. So let's say we want to look at the 5 minute, right? As you can see right here on the 5 minute, we have this order block. So right here, this also shows more confirmation on a lower time frame that we're going to go lower. So here's an order block, and we're respecting OTE of this, which is the 70.5% level, and then we had lower. All right, so then you can also find another setup probably on the second entry of this move. So right here, this is apparent on the 1 hour, but let's say you were wanting to take this SMT. You could go down to, I'm going to real quick draw a box around this. So then you could go down to, let's say, the 5 minute, and you'd see if there's an entry here. So we have consolidation. You would wait for this to get broken. So you would preferably look for this low, right, to get broken, because this is the prominent low. These lows are kind of stuck in a consolidation. So if it goes below this low, it's not considered as a market or as a market structure shift. So you can see we would tap into this for value gap. Maybe that we could say this consolidation is an order block or type of resistance, but we did respect that. But you would really be looking for a prominent low to be taken. So maybe this low right here, or even this low that gets taken. You look for the retrace back up, and you can see we have probably have a 15 minute for value gap here. Hold on. Yeah. So like on this 15 minute, we have this order block, and that's what could have been respected there to head lower. Plus we have this SMT anyways. You see the strong rejection off, retraced, so rebalanced into this inefficiency to head lower, right? So you want to look for models inside of models. This again, this 1 hour, this is a 1 hour model right here, and then we have smaller models in this entry, which rejects lower, and this entry, which rejects lower. And then same thing here, which I talked about earlier. On the 15 minute here, we had a retrace to this for value gap as your first entry. And then after this liquidity is taken, you wouldn't look for another entry because that's the objective. After we take this liquidity, there's no reason to go back to this liquidity. It just so happened to have done that here, but there's no reason, right? So yeah, looking into the next couple days, I'm going to clear this out again. I do just want to see us start to head lower. We may again rebalance. We may even head lower this day and then rebalance to a daily for value gap. And also keep in mind, this is the first sort of prominent for value gap we have gotten. And you may be thinking like, okay, well, why not this for value gap? The reason why this for value gap wouldn't really work is because we're in a range, right? we haven't really taken any liquidity. I mean, we kind of did here, but still, we're not breaking through something. So right here, we broke through this, created this fair value gap, then that will be our market structure shift to head lower. And I also do have OTE marked here because this is a level that could possibly see us create a power 3. So you always want to look at both sides. You want to look at a bearish side and a bullish side of this. So we also have all of this, which could be accumulation. This could be our manipulation to head to this fair value gap. So there's that. And then we could have this distribution to go higher. So that is also something that could possibly happen. So we're just gonna have to see how that works at that level, but that is a target where I definitely think we are going to head down to, or at least going to head down to this fair value gap. Probably not this one, because actually it really honestly could be any of these fair value gaps. If we look at the daily though, this is a fair value gap that's already been tapped into. We don't have any inverse fair value gaps, so we'll see how that happens. Again, nobody can really predict that. It's two ways the market could go, but if you're looking liquidity wise, I mean, this is sort of could be considered engineered buy side, but I don't think it is, because they're not constant prominent highs being put in, right? Right here it is constant lows because we have a low put in and it barely got taken. There's no reason it shouldn't have taken it. It was only a couple ticks off, right? Only a couple points off. And then same thing here, we came back up, created this low again, came back up, created this low, right? And then we took out all these lows. So I do think that if we did create sell side liquidity, engineered sell side liquidity, that could mean that we're going to head back down. Usually power 3 happens to where we have engineered liquidity up here, but it's not really engineered liquidity, right? We only have really this point and this point, and that's not engineered. Plus this also did respect off fair value gap, and these respected off of PD arrays as well, all to go lower. So yeah, we'll see how that happens, but that's really all I have. So I hope you all enjoyed, and I will see you all in the next charting session.